Hello, everyone. Welcome to Smart Investing. And today, this video is going to be about the special dividends for the month of November. So, this is going to be number one out of two. So, today is Saturday, November 12th. And actually, in a few more days, we'll be like halfway through the month. So, what I'm trying to say is that will be almost half of the month. So tomorrow, it still won't be half of the month. But anyways, uh, I usually do it every 2 weeks. So this is the second week of the month, and these are the stocks that I have. And obviously, I don't want to do it all one video at the end of the month because obviously there's gonna be too many stocks. So this is the list that I have. It's about 10 stocks, 11, more or less. So yeah, most of these are special dividend paying stocks. I think only one was not a special dividend paying stock, but it came up on my radar anyway, and we're gonna go over it anyway. So we're just gonna see the special dividends, and that's pretty much it. So let's begin. The first stock that I have is JBSS. So this stock I haven't heard of yet. Um, I, it, uh, they sound familiar, like a while back, but they're just not right off the top of my head. I just can't think of the sector and if they're a good company or not. I know I've seen so many companies, but yeah, we'll see if they've been doing pretty good or not. So this is only almost a $1 billion company, almost. Earnings are at 5. They do pay dividends, and that is 75 cents for the year. Dividend yield is really, really low. I know people hate it, but hey, uh, better than nothing, right? So that's not including these special dividends. So that's exactly what we're here for. So let's just jump right into that. So for the special dividends, how frequent or when did they start paying special dividends? I would say ever since 2012, we're rolling back here. So that's a nice chunk of change for that time period. So we're talking about 10 years ago. And then it looks like they only paid once a year, which was still good enough anyway. And even if they made a cut back to even $1 within the past 5 years, that was still a good payment. So now we're rolling into 2017. And in 2017, that's when it looks like they started to pay two payments and kind of slow down and adjust their earnings more as they go and manage money better and distribute better. So as we can see, yes, there's one payment in July, basically on the same day, but still, well, sorry, in 2016. So that's when they did the two payments, and that was actually one special dividend and then one regular dividend. Then in 2017, uh, they paid in late July, and they did a special dividend and then the regular dividend on the same day. So in 2018, they did a special dividend and then a dividend, same day. 2019, special dividend on the same day with a regular dividend. Uh, in 2019, just a special dividend. And then in 2020, things were rough that year, but apparently they still did pretty good for payments. They paid two special dividends, and then they didn't pay nothing for the first payment of the dividend, but the second dividend, regular dividend, was the payment, and that was the payment of 65 cents. So it looks like they still pay at least once a year. And in 2021, they made 3 payments, one in February and 2 in August. And then August was 2 payments on the same day. So that was actually $3 payment, and then $2.50. So these guys are a regular special dividend paying company. As you can see, they're paying at least $2 every year. And according to this company, the company's only at $81. And we look at the chart real quick. So obviously, if you came in at a lower price, would have been better. So you're only missing out, you know, even if you got it at the lowest price here, at around, let's say you came at around 68, then, or let's see what was the lowest. Even if you came at around 65, so that's only not even a $20 difference, which is somewhat of a big range, but it could be worse because there have been other stocks have other price ranges that are like way out there. So for this stock, again, JBSS, they paid a regular dividend of 75 cents, but that's not including the special dividend, which was over $2. So you're getting a $3 return for the year. So next stock up was EOG. I've mentioned this company countless times. Definitely a good company. They're also in my personal portfolio. And again, they're going to pay in November. I received a notification that they were going to pay, but I just don't know when. Sometime, I believe at the end of this month. So again, they came up on my radar. I just don't know how much. And they are a really good company, one of the best in the industry for oil and gas production. And again, one of the best to be in your special dividend portfolio. This is definitely in the top 10 that I've included in the special dividend portfolio, which is really known as the Epic Income Portfolio. So definitely a great stock to have. Next one up, ITIC, Investors Title Company. We can see they're in a major downtrend. Even for the 5-year, they've lost about, I'd say, so we're talking about a low of about, what, 130 or 128? So at least a $30 loss for the year, and then $303 million market cap. Very small company, pretty risky, but they look like they're doing pretty good. I like this. I like dividend payers and even special dividend payers when the volume is really, really low, just because not a lot of people are involved in the stock. And then I just like the fact that when you're buying shares at a smaller company, you just feel like I don't know how to describe it. Like you're more of an owner, because since nobody's really involved in that company, it makes it more unknown to everybody else, and it makes it more known to you. So you're just pretty much stacking up your ownership. Your percentage in ownership just goes up, which I like, and it makes you more involved with that company. So anyhow, this company has paid a special dividend before. As we can see, at least the last 5 years. So they're pretty standard in paying the end of the month, as we can see here. Again, on the 30th. Look at these special dividends, 2.4, 10.6, along with special dividends. Along with regular dividends. So, as we can see here, from 2018 to 2019, the regular dividend, they haven't had a raise up until 2020. And then in 2021, they received only a 2-cent raise. So 2021 going to 2022, the payment for the stock has been the same. So apparently, which is a good thing, they haven't had a cut, but their dividend payment has just slowed down a little bit, because if you see, they went from 4 cents, now they're going to 2 cents. It's okay. I wish they still paid the 4 cents. That would have been pretty nice, but lowering that to 2 cents, again, the company's still good. It's just, it sucks to see them slow down that much. So hopefully, when they pick up their go in the uptrend, hopefully their payments can rise as well, and they can give better dividend raises. So we're gonna see if they have any splits. No splits. And again, like I said, they're pretty frequent. They're pretty consistent on paying the end of the month for November, like every year. They're very adamant. And then, obviously the year comes to a close for that. So you can see there they pay pretty good. So this company is in the property and casualty insurance. Again, I can't say if it's a good company or not. I will have to do that at another time. I'm sure there will be a time to look at it. So we're just going to move on to the next one. Next one up I have is AMR, Alpha Metallurgical Resources. So you can see in 2021, it just shot up. And it hasn't slowed down much, which I'm pretty surprised. It's gone down tremendously to from 180 all the way to like 105, and then it picked up. So that's an $80 difference in a matter of less than 3 months. And then, as you can see, it started to go up around here, then went back down again, took a little dip, following this 200 EMA, but started to go up. And now it looks like it's starting to drop down a little bit. So a fair value for this stock would actually be around the 130 range. So right there would be like 130. Actual price is 132, so I would consider that slightly overvalued. Hopefully it will come into normal price ranges. But we're not here to talk about that. We're here to talk about the special dividends. So apparently they started to pay a regular dividend, and so far they gave a raise, and that's a good sign. So now I did receive a notification that they will pay a special dividend. I don't know how much, but hopefully it goes through this month. If not, it will be in the following month. But again, this company is determined to make the payment for the special dividend. So again, that was AMR, Alpha Metallurgical Resources. They are in the iron and steel industry, just so you guys know. Can look at them real quick. So the PE is really low. The earnings are really, really high. Obviously, steel is recyclable, and it's a commodity. So steel industry is a very small market. So hopefully they can grow and do better. But their earnings seems like they are holding up. So yeah, definitely. They can cover the dividend. So they do seem like a decent company. Next up is COALINDIA. No, it's a long name, but again, the reason for the long name is because this is not headquartered in the U.S. I think this company is 3M, if I'm not mistaken. It's a 3M branch. And apparently, I don't have any news for the special dividend, but it was just notified to me. As we can see here, they're typically paying once a year. So that was twice a year. That was once. That was once. It's actually twice. And that was twice. So they only paid. The only time they paid once was in 2019. But anyhow, it is, to my understanding, that they will be paying. I don't know how much, but it says that they will be paying a special dividend for the end of the year. I can't remember if it was November, December, but again, this company, it is ordered to pay the special dividend. And again, you saw it was at 235. I don't know the currency and all that, so that's another company that I've reviewed it before. So again, that company's headquartered in India. Next one up is PFSW. So we want to see they're $10, $228 million market cap. PE is not showing me. 52-week high and low. That's not appealing. That's not appealing. For the long term, the numbers look bad. Even for the short term, numbers look bad. Chart looks bad. I wouldn't invest in this company. I wouldn't care even if they gave you $10 for the special dividend. It's not worth it. I'm not even seeing regular dividends. Excuse me. So, yeah, it doesn't even show anything. So they don't even show previous history that they paid before in previous years as a special dividend payer. So, again, it came up on my notification. I think this was one of the stocks that was a maybe. So again, I don't think this company, it might be a 50-50 chance, but from the history and from what I'm seeing and the company itself, which looks pretty bad, we'll see if they're going to pay special dividend. I don't think so personally, but who knows? They might. I just don't see it. And if they do, it'll be awful just to see a 10-cent special dividend. I don't think that would be quite correct, or that would fall into satisfaction into many investors. Next one up is 3M India. So this company, again, this is a branch for India, for the 3M company. So again, no history for special dividends, and the volume is pretty low. Again, this is a branch of the 3M company. So obviously, with the US dollar currency going up, for the most part for the year, it puts pressure on companies headquartered in the US, which they put pressure on themselves if they have their businesses overseas in other countries, because obviously they're making less money and less profitable. So in order to avoid more losses than they should, I don't know what companies might do, shut them down temporarily or what, or who knows what. But again, by the looks of it, I don't think this company is gonna pay much. I could be wrong. I hope I'm wrong, but I don't know. It just came up on my radar. So again, these two India companies are like unknown. Draw a big question mark for that one. Those two, because I'm just not too sure if and when and how much they would pay. So those are the ones that are iffy. So we have a few more and we'll be done pretty soon. Next one up is 9EV. That one's called Embark Education. They came up on my radar as a special dividend payer that they were going to pay, I think, by the end of the year or by the end of this month. Um, I don't know why or how this company came about in my news feed, but it doesn't look good at all. Everything looks awful and fishy about this company. It almost looks like a trap, but on top of that, it almost seems like a over the counter stock when in reality it's not. It's not showing me anything for a over the counter. I'm just surprised because the numbers are just horrible. But yeah, I stay away from this company, even if they do pay. So we're gonna look at the next one up and try to come to a close with this. So next one up was Haverty Furniture. Again, I mentioned this stock in the Epic Income Portfolio. Again, I mentioned that it was a good company to add to your watch list because they paid special dividends. Get it nice on the dip and stuff, and then while it's underrated, and with a company going up that high, I'd be cautious. It would have been better to buy it around there. So it would be a nice time to sell. I mean, looking at the line from here to here, that looks like a long line, but when you actually look at the price, it's not much. But again, it's not about being greedy. It's about just making some money, getting in and out while you can. If you do like the company, then you can stick around for the ride and hopefully buy more shares as it dips. But again, really good company, and they are a frequent special dividend payer. And I'll just show you guys once again. I've mentioned this company again, but again, if you see here, this is another company that actually pays in November again. Also, another company that pays in November, paid in November 2019. They didn't pay in November, but they did pay special dividends. So not in 2019, they did not pay the special dividends, but pretty frequent, pretty frequent. So there you have it, and they do dividend raises as well. So definitely a good company. Next one up, RLI. So RLI at $126.18, $5 billion market cap, dividend yield at 0.82. That is really, really low. Looking at the numbers, they look okay. They look okay. Definitely a nice looking stock to add to the watch list. The numbers look pretty good too. It looks like they're holding up. Now we want to see if they're frequent dividend, special dividend payer and dividend payer. It looks like they, along with the special dividends, it looks like they're paying, raising dividends. So last payment was 26 cents, and I'm gonna work my way backwards a little bit. So it looks like they did a penny raise. Yeah, just by the penny. Just by the penny. It looks like they're doing a penny every year or so. So really slow raise, but hopefully it can pick up. And as a special dividend payer, I think there are better companies out there, but if you want to start off, this company would not be the company to do it with, just because pretty expensive compared to other companies that pay special dividends. And again, you can find a similar company in the similar sector that are just way better than this one, and well positioned better than this one. So again, RLI, They're okay. They need work, but again, they are a special dividend payer, pretty consistent. So they're okay to add to a watch list. It'll be fine. Last one up is PFIN PFIN. Looking at the chart, it's an obvious downtrend. You had a bunch of spikes here, but for the most part, the numbers look bad. The price looks bad. Market cap, just horrible. Now's not a good time to be a really, really small company. If you don't have around 2 to 3 billion, then your company's looking to suffer. 52-week high and low earnings are horrible. Everything. This is just a bad company. Just by looking at the first page and the chart, I'm gonna say no. Don't even add it to the watch list. But again, if we see here for the special dividend payments, we have here they paid or will be paying on the 17th 5 cents. So aside from the special dividend that they have been paying, so far a 10-cent payment for the year. But I will say this, every year before that, they've paid 5 cents. So it looks like they actually cut. So the cut was actually made in 2016. They went from paying 50 cents to 5 cents. But other than that, if we keep scrolling up, we can see they did not even give raises. And then on top of that, I want to see how infrequent their payments are. In 2021, they paid nothing. In 2020, they only did one payment because the rest of the year was horrible, which I understand. They're a very small company. So, yeah, they cut the dividend. They haven't paid since up until recent. And then in 2019, they made 4 payments. And then all were 5 cents. So for this company, again, I don't like it. I think they're pretty bad. But again, I'm not here to do that. But just like a quick recap, these are the special dividend paying companies. So that's all I have for you guys. Thank you guys for watching. I know the video's long, but again, I covered about 10, 11 companies here. So again, if I mentioned they were bad, don't even add them to the watch list. If they're okay, I mean, you can keep an eye on them, but again, only a few really good companies here. So be careful which ones you add, because you might get them at a higher price. Again, I can't make recommendations on which to buy or sell or whatever, or price ranges. Even though I do mention it, again, please consult a professional, registered, licensed, and insured advisor, because I'm not one. Even though I'm good at what I do, again, please seek somebody who's registered and all, who has all the paperwork and all that good stuff, because I don't. So again, thank you guys for watching, and hope you guys enjoyed the video. I'm gonna go to bed. Have a good weekend, guys. Thank you guys for watching again, and I'll see you guys soon in the next one.